60973. Tweet at LBC. Text 84850. Ian Dale at Drive on LBC.
Hello, a very good evening. I'm Ian Dale, leading Britain's conversation on LBC. A very warm welcome to the show. Let me tell you what's coming up a bit later. We'll be getting more reaction to the very sad news that Rick Mail has died. And after 6, it's 100 days to the Scottish referendum. Gordon Brown said today, if Britain doesn't wake up, there'll be home rule for Scotland. Is Scotland edging near going it alone? And then later, we're going to talk about marriage guidance. Does it work? The reason we're talking about that is because Labour are promising £250 towards marriage counselling for every married couple. I think that's a ridiculous idea. Do you? It's 5 minutes past 5 here on LBC, and we are streaming this hour live on the website. If you want to see us in glorious HD, Technicolor, whatever the phrase is, you can go to lbc.co.uk right now. And the reason we're doing that is because I'm welcoming Ian McCafferty to the studio. He is on the Monetary Policy Committee of the Bank of England. He joined us for a phone-in back in February, and it was so successful we thought we'd invite him back. Good to see you again, Ian.
Thank you very much.
Now, since then, there's been a lot of really good economic news. How much is that due to government policy? How much is it due to Bank of England policy?
I think a lot of it is due to neither, to be honest. I think Bank of England policy and government policy has helped, but the main reason that I think we're seeing the economy strengthen as we have done is as a result of a big shift in the level of confidence amongst both businesses and amongst consumers. Confidence was hit very badly by the recession and the financial crisis, and then secondary by the Eurozone crisis of 2012. It's taken a long time for that to recover, but I do think over the last year we've seen the degree of uncertainty about where the economy is going and people's jobs start to come down, and that's been a big factor in driving the recovery.
Now, you're going to stay with us for the next 40 minutes or so to take calls. 0345 6060 973. Lots of subjects you could phone in about: the economy, interest rates. If you're a first-time buyer, you want to get on the housing ladder, but you can't get a mortgage. Well, let's see what the prospects are like in the future. Savings, I think, is a really interesting one as well, because there are lots of people who wonder why we don't save as much in this country as others do. 0345 6060 973. That's the number to call to speak to Ian McCafferty from the Bank of England Monetary Policy Committee. Right, let's get cracking with AJ in Newcastle. Hello, AJ.
Oh, hi, Ian.
Hello, AJ.
Hello, Ian. I've got a question for you, Ian, which was about the recent reports out about the Help to Buy. And I wonder what your thoughts on how can someone like Christine Lagarde and the European Commission urge caution on Help to Buy when the recent statistics that have shown that it only accounts for 3% of all mortgages?
Well, I think we have to be very cautious and careful about how the housing market reacts. I think, as Mark Carney, the Governor of the Bank of England, said recently, it poses one of the big potential risks for this economy if the housing market, and in particular if borrowing and lending around the housing market, get out of hand. But I agree with you that the Help to Buy directly is only a small portion of the current housing market and the sharp rise in prices that we've seen in recent months. And I think we need to be careful about how we then adjust.
And especially in London, where actually there are comparatively few properties have been bought on that, and yet house prices in London are rocketing ahead of the rest of the country. So you could argue, actually, it's got no effect at all in some parts of the country.
Well, I think the issue about London is that in addition to it being a very different market from the rest of the country, much of the rise in prices that we've seen recently has been driven by a high proportion of cash buyers. So from that point of view, worries about the housing market, I think, need to be kept in some sort of perspective. It can destabilise the economy. It can lead to significant financial instability if the amount of lending to the housing market or the amount of borrowing by individual house purchasers gets out of hand. So we do need to be very careful to ensure that that doesn't happen. And to that extent, if we need to therefore regulate How to Buy without taking out the benefits that How to Buy has had in terms of stimulating housing around the country, just to take the edge off some of the price rises that we've seen, that may be no bad thing. But I think we have to put everything into proportion.
AJ, would you like to, what did you make of Christine Lagarde's intervention?
Well, I just think that it was, a comment for comment's sake as opposed to actually looking at the facts and the figures. If you look at what is really probably, as Ian alluded to there, took the edge off the housing market, it was a recent mortgage market review, which has looked at more affordability of people being able to take out these mortgages, and they've put the onus back on the banks. Previously, the affordability rule would probably lie in the hands of the financial advisor, which really probably had a conflict of interest when taking out a mortgage. So I do think that a lot of the media and a lot of the hype, and now even as Europe is speaking, is looking at the housing market, but clearly that the London market and the South East market is not the whole of the UK. If you look at where I come from in the North East, it certainly had an impact, but a positive impact, not in creating a housing bubble, but in terms of, as again, Ian, I tend to agree with you, as effect on buyers' confidence, and that's important.
I don't know which Ian he's agreeing with, so we'll say he's agreeing with us both, shall we? AJ, thank you very much. When you get these interventions from the IMF, from the European Commission, from the World Bank, what do you make of them? Do you actually take them seriously, or do you just sort of roll your eyes like most of the rest of us?
Oh, I think I would take them seriously in terms of at least trying to understand the analysis that underlies what those recommendations come up with, in the sense that I think these are serious people and they have the best interests of the UK economy at heart. The IMF's job is to help provide economic stability throughout the world, and if it can provide advice to governments or to central banks, then I think that is a good thing in terms of adding to the debate. But at the same time, you can have two reasonable economists in a room who will disagree about exactly what is going on.
You can sometimes have one in a room and they'll disagree with themselves.
That is quite possible.
But it is a guessing game, isn't it? Economic forecasting, because even the Office of Budget Responsibility, which was set up to give independent forecasts, I mean, they're very rarely right. The IMF seems to be very rarely right. The European Commission, not so sure. Why should we take any notice of these forecasts?
I think it's harsh to say that it's a guessing game. There is a great deal of time and effort, understanding and experience put into trying to make economic forecasts. But in the same way that you have complex systems around the weather, economies are very complex systems. So it is inherently extremely difficult to make good forecasts, particularly over the longer term. And as such, I think what forecasts do is provide us with a framework of understanding rather than necessarily giving us an exact point estimate of what things are going to come out like.
0345 6060 973 if you'd like to put a question to Ian McCafferty. If you just tuned in, he sits on the Bank of England Monetary Policy Committee. They're the people that set the interest rates every month. We might have a couple of questions on that in a moment. In fact, I think we've got one now. Jeff is in Romford. Hello, Jeff.
Hello there, Ian and Ian.
Hi. What would you like to say?
I'd like to know, our interest rate, I think it's 0.5% at the moment, but why didn't it go any lower? Because in America, I believe it went down to 0% or thereabout.
Well, and indeed, the European Central Bank has cut their interest rate from 0.25 to 0.15%. All the talk in this country, Ian, is of interest rates going up, and yet in Europe, they're going down again.
Well, they are, and that's a reflection of the different state of the economies and the different time in the economic cycle that we face relative to either the United States or to the European Union or the rest of the European Union, the Eurozone. Why did we not cut rates further than we did? I think the answer is twofold. One is that it's not clear when you cut rates at very low levels quite what the impact on the economy is going to be once you get very close to zero.
So you don't see rates going lower than they currently are? Well, you can't say ever, but certainly in the near future.
Well, I think we took the view that for the UK, given the particular structure of the banking system and the way in which people respond to the level of bank rate, that 0.5 was effectively as close to zero as we could get at the time that we were considering lower rates. That's not to say that in other countries the differences in the economic structure does not mean that they cannot do different things, but we felt that 0.5 was probably practically
but the mood music, particularly among economic commentators, is that interest rates are more likely to go up than down in the next few months. I gather one of your colleagues every month recommends that they should go up now. Is that right?
That's not according to my understanding,
No?
certainly. I mean, what we have said is that the time when it becomes appropriate for interest rates in the UK to start to rise back to a more normal level is approaching. But we've also said, one, that we think there is scope for the economy to grow a little further before we really get to that point. And secondly, once we get to that point and thereafter, that any rises in interest rates that we anticipate, we hope will be only gradual for quite some time to come.
But it seems to me that we're looking at that probably sooner rather than later, maybe before the election. Mark Carney, when he first took over at the Bank of England, he said, well, when unemployment got down to 7%, that's when interest rates would go up. I think unemployment now is 6.8%, so it's imminent, isn't it?
Well, it's not what he said, to be frank. What he said was...
That's what most people think he said.
That may be the case, but certainly what he said and what we attempted to communicate strongly to everyone around the economy was we would not even consider raising rates at least until unemployment fell to 7%. But we did say also at the time that we felt unemployment could fall a lot further without there being significant inflationary pressure.
Would it be true to say at your monthly meetings the discussions on whether interest rates should go up now are slightly lengthier than they might have been a few months ago?
Well, I think the meeting lasts about the same amount of time. What we
That's
have
not
said,
what I asked.
What we have said, and what we said in the last minutes that were published, was that the decisions were becoming more balanced. I think a year ago, with the economy flat on its back, it's a very easy decision to make as to quite what the appropriate level of interest rates is. After a year of relatively strong growth, in which we have seen a sharp fall in unemployment and some very modest improvement now in nominal pay scales, although that's still very modest, then you have to say that the decision becomes more balanced. But as I said before, I think the view amongst the committee is that given the depth of the recession and the loss of GDP that we faced over the course of the crisis and the ensuing recession, we can still see the economy running a little bit longer.
Because we're not quite yet back at 2008, are we?
No, I think that's probably likely next quarter.
We have to go to the news and travel. 0345 6060 973 if you'd like to put your question, maybe on interest rate savings or anything else, to Ian McCafferty from the Bank of England. This is LBC. It's 5:16.
Ian Dale at Drive on LBC.
With 5-star RAC European cover. Don't let a breakdown ruin your holiday.
Come and experience Lebanese dining at Marouche Restaurants. Try some of our amazing dishes, kafta dipped in a delicious hummus, or a colourful meze, complemented by a robust Lebanese red. With live music and traditional belly dancing, enjoy an atmosphere to match the food's rich and distinctive flavours. Go to marouche.com to find out more. Marouche Restaurants, the finest Lebanese food across London.
A house fire can take away a lifetime of memories in 2 minutes. About the time it takes to test all your smoke alarms. Fire kills. You can prevent it.
Darling, have you seen these brand new Galliard apartments in Waltham Cross, 5 minutes walk from the station and only 25 minutes into London Liverpool Street?
You mean Galliard's King Edward House, with apartments starting off-plan from only £150,000?
Yes, it's a great opportunity for us to get the kids on the property ladder, and at these prices we could even rent it out until they move in.
Don't forget Galliard's unbeatable specification at the price.
And once again, Galliard are offering exchange on the day with a deposit of only £2,000.
To invest in this exciting opportunity to get your family on the property ladder, come to our sales weekend at the Marriott Hotel Cheshunt on the weekend of the 14th and 15th of June. To register, call 020 7620 1500. That's 020 7620 1500, or log on to galliardhomes.com. That's galliardhomes.com.
It's 18 minutes past 5. News headlines, Simon Conway.
Tributes are being paid to the comedian and actor Rick Mayall, who has died at the age of 56. David Walliams has described him as his comedy idol. The Education Secretary Michael Gove says new rules will be drawn up after 5 schools in Birmingham were put into special measures over claims of Islamic extremism. Transport for London says 100 extra buses will be laid on after England's first World Cup game against Italy. The match starts at 11 o'clock on Saturday night. This is LBC. Your travel news is next.
What up, this is Snoop Dogg. When I was a kid in Long Beach, there was this busker who used to sing opera real loud. Thing was, he had a voice like a pussycat on helium. People didn't pay him for the song, they paid him to shut up. Growing up in the hood, I learned a lot about hustlers, like Tone Deaf Tony. So take it from me, if you want to avoid getting taken for a ride on your car insurance, visit Money Supermarket and get a better deal. You are so Money Supermarket.
I'm Amy Solomon in the LBC Travel Centre. Big problems continue in Cambridgeshire this afternoon. Southbound M11 is closed between 11 at Cambridge South and 10 at Duxford. It's because of a serious accident that's causing delays back to junction 13 at Cambridge at the moment. Also, the A3 looking solid northbound from Burnt Common in Surrey to the Wisley interchange at the M25. Got an accident involving 3 cars blocking one of 3 lanes. Patchy delays through East London. That's heading east on the A13 from Canning Town to the Beckton roundabout, and on the A12 from Poplar to Gants Hill continue. That's after a lorry broke down earlier. And the northbound A1M in Nottinghamshire is still closed. It's between junction 34 at the A614 and 35 at the M18 after an accident. Also in Cumbria, the M6 is still closed in both directions at junction 41 for Catalan. It's after a serious accident. An air ambulance is still at the scene and it's causing major delays in the area. Keeping you moving, your next travel update is in 15 minutes.
LBC Travel.
With Go-To Meeting. Swap long office hours for quality family time.
Here are 3 great reasons to join Sky TV right now. Get the original bundle for only £10.75 a month for 6 months. That's half price. Enjoy top shows from the UK and US with Sky Atlantic. And get a £125 reward when you join online. Search Sky Bundles to join today and get a free Sky Plus HD box. But hurry, offer ends 19th of June. Sky. Believe in better.
£21.50 per month after 6 months. 12-month minimum term. £25 standard setup fee applies. Choice of £125 M&S voucher, Tesco gift card or prepaid MasterCard. Further terms apply.
Nick Ferrari at breakfast on LBC.
This idea of Muslim extremism in schools, the Ofsted report's due to be published today. Gail Larkin is president of the National Association of Head Teachers. And when you hear of ideas of dawn raids and lightning inspections, how do you react?
We only get half a day's notice now. I find it incredible that people think we can suddenly insert about 15 lessons on Christianity.
Research is saying that you are not able to drive and talk at the same time. Mate, when was the last time you were subjected to a mental arithmetic test while driving a car?
You're asking me to calculate that now and I'm managing to drive.
Now that's a good answer.
Nick Ferrari at breakfast. Every weekday morning from 7. Only on LBC.
With Hampton by Hilton. Refreshingly different and surprisingly affordable hotels.
22 minutes past 5. lbc.co.uk. That's the website you need to go to if you want to see us streamed live. That's what we're doing this hour because Ian McCafferty from the Bank of England Monetary Policy Committee is with us taking your calls. The number to call if you want to talk to him and ask him a question, 0345 6060 973. Just on savings, OBR figures show that British people are saving less than 5% of their incomes, and that's going to fall by 2018 to 3%. That's a projection. Now, why do we save a lot less than people in European countries? Wouldn't it be better if we saved more, maybe to build up some reserves to cope with high mortgage rates in future? Or is it useful to have people spending instead of saving because, of course, consumer spending keeps the economy growing?
Well, there is an element of that, and certainly monetary policy over the course of the last few years has been designed to encourage people to spend in order to help the economy recover from the recession. One of the difficulties with savings ratios, in terms of the comparison that you mentioned, is that they are measured in different ways in different countries. And how you account for pensions, for example, and whether your pension is privately funded or run by the state, makes a big difference to how you look at and how you measure savings. So I think it's quite difficult to draw simple conclusions from the figures from each country.
But in the long term, the Bank of England would presumably advise us to save as much as we can.
Well, I think we would say we need to save a prudent amount for in order to prevent unhappiness in the future. Certainly, people need to save because of the uncertainty of the economy, and I think I think it's generally accepted in this country that as we're living longer, we will need to save more as a contribution towards our old age.
But of course, because of the low rate of interest, a lot of savers, a lot of pensioners in particular, aren't very happy because there's a real disincentive to save, isn't there?
Well, there is a disincentive to save, but that's part of the function of monetary policy through the cycle. When interest rates are high, people are encouraged to save, or at least not to borrow, and the idea is to slow the economy down. When the economy needs support, then what we need to do is encourage people to some extent to spend a little more than they're prepared to.
But do you think that people in the future are probably going to need to save, maybe because they're going to live longer, they need to save more than maybe sort of your and my generation?
I think that's going to depend on all sorts of factors, such as how real incomes grow and how the level of wealth through property prices and other things develop. I mean, one of the interesting things, coming back to the statistical measure, is that the ONS is in the process of revising its calculations as to how to treat the savings ratio. Will actually show that our savings ratio is going to be considerably higher when they announce the new data by the end of the year.
Statistics, eh? What was it Disraeli said? Right, Anthony is in West Hampstead. Hello, Anthony.
Hi, how you doing?
Very well. What would you like to ask?
So, my wife and I are trying to buy a house or a property in London. We've been renting in West Hampstead for 5 years. I'm a self-employed builder and only have 2 years' books. Why can I not use my renting history as some form of credit reference to be able to get a mortgage?
I have to say, Anthony, that to be honest, I'm not really qualified to answer that question, I'm afraid, because that depends very much on how the banks perceive their credit risk in lending the money, and they will set up certain procedures and certain requirements in terms of that. And clearly, they've decided that renting proof is not sufficient. It's not something that I can affect on the MPC, because we're looking, as it were, at the very broad economy rather than specific issues such as that.
Do you sympathise with people like Anthony who want to get onto the housing ladder but find themselves frustrated by, bank lending criteria, because it is so different, again, from when you and I probably bought our first properties?
I do sympathise, because I think it's clearly one of everyone. It seems everyone's dream in the UK is to own their own home and to live in it. And to that extent, I think we shouldn't be destroying dreams. But at the same time, I think if we look back at the pre-crisis period, it was probably the case that lending proofs and lending rules were far too lax, and that people were encouraged to borrow far too much relative to what they could really afford. And that was one of the reasons why we saw housing cycles and housing difficulties in the past. So I think the fact that the Mortgage Market Review, the new set of regulations designed to ensure that people either do not borrow too much or that banks do not lend too much, will probably introduce greater stability than was the case. But it does mean that people are finding that lending conditions are a bit tighter than they were.
Stability actually means
2007.
fewer mortgages, doesn't it? Because the month after those criteria were introduced, the number of mortgages actually dropped.
Well, I think you have to distinguish between a number of different features. I think there may well be a longer-term impact of the MMR in terms of the number of people who are therefore able to take out a mortgage. We don't know that yet. What I think we have seen in the short term is what we call operational issues, in the sense that the staff are getting used to the new regulations. Some of them are on training. It's taking, the interviews are a lot longer than they used to be. And therefore, I think there's a throughput issue in the short term, which may explain part of the turn down in mortgage approvals in the short term.
Well, our switchboard is buzzing at the moment. If you can't get through, do keep trying. 0345 6060 973. Lucy is in Ilford. Hello, Lucy.
Hello, Ian.
Hi.
My question is, what are the banks doing to younger people that are trying to get onto the property ladder? I can give you my background, but I'd like to hear first.
Well, no, just very briefly, tell us your situation, Lucy.
Okay, so I'm 22 and my husband is 26. We're both secondary school teachers, so we get paid quite good money. And we've just been through the process of getting a mortgage. We tried to get a mortgage on the Help to Buy scheme, but we were unable to do so. And our mortgage advisor kind of said that the Help to Buy scheme is mainly aimed at people that are sort of in their late 30s, they've been living at home, they've got like credit history, and they're a safe, secure lending person. And for anyone else, like younger, it's not as suitable because we don't have the credit history. We managed to get a mortgage in the end, a 95% mortgage with great trouble. But like the Help to Buy scheme, you would think is for first-time buyers of any age, but it seems that the younger generation, like me, we can't use the Help to Buy scheme.
Okay.
We've got no credit history.
Would you be worried if the Help to Buy scheme was expanded in any way to help maybe people like Lucy?
I think we have to be careful that the Help to Buy scheme doesn't stimulate a housing bubble. I mean, I don't think it is at the moment. We talked earlier and said it's only a small proportion of what's going on in the housing market, but we have to be careful that we don't let the housing market run out of control. I have to say, in answer to Lucy's first question, the objectives and the responsibilities of the Bank of England, which are set out by Parliament, are actually quite specific, and they are to try and control the rate of inflation, to ensure that we have financial stability in the economy, and then to regulate market participants. And to that extent, what we can do is quite limited in the housing market. We can stop banks lending too much. We can encourage banks not to encourage people to borrow too much, and so on, to promote financial stability. Helping younger people or any particular group onto the housing market is rightly the responsibility of the government. So I think you need to look to the government, Lucy. But I have no knowledge that the Help to Buy scheme is somehow age-related.
Okay. Lucy, thank you for your call. Asa Bennett, who's a financial journalist, has tweeted, "Love that the Bank of England has got Ian McCafferty on Ian Dale's LBC show again, bringing monetary policy to a wider audience." Maybe that should be the strapline for Ian Dale at Drive. I can think of worse. We will have more calls, more questions to Ian McCafferty in just a few moments' time. 0345 6060 973. I'm Ian Dale at Drive. LBC News Time. It's 5:31. And Simon Conway has the news headlines.
Tributes are being paid to the comedian and actor Rick Mail, who has died at the age of 56. The star of shows such as The Young Ones, Bottom and The New Statesman was pronounced dead at his home in southwest London this afternoon. Impressionist Rory Bremner has described him as a fireball of creative comic energy and inspiration. The Chief Inspector of Schools says a culture of fear and intimidation has taken grip at some schools in Birmingham. 5 in the city have been placed into special measures following allegations of a takeover plot by hardline Muslims. A member of the Bank of England's Monetary Policy Committee has told LBC the time for a rise in interest rates is approaching, but Ian McCafferty says there is still scope for the UK economy to grow a little further before the base rate is increased from its historic low of 0.5%. England have trained in Brazil for the first time ahead of the start of the World Cup this week. Even Alex Oxlade-Chamberlain, who's recovering from a knee injury, did some sprints at their base in Rio. The FTSE 100 closed up 16 at 68.75, and LBC weather, any thundery showers for London and the southeast should mostly die out this evening. Some fog patches overnight and lows of 11 degrees. Heavy downpours becoming confined to Northern Ireland and the north of Scotland overnight. Dry with clear spells elsewhere. A cooler day tomorrow with sunshine and scattered heavy showers for northern and western parts. LBC News Time, it's 5:32.
I'm Amy Solomon in the LBC Travel Centre. Unfortunately, in Cambridgeshire, the southbound M11 remains closed. It's after a serious accident between Junction 11 at the A10 and Junction 10 at Duxford. There are major queues back from Junction 13 at Cambridge on the approach to that one. Also, the A3 in Surrey, solid northbound from Burnt Common to the Wisley interchange at the M25. Got an accident blocking one of 3 lanes on that stretch. And through East London, generally eastbound, long delays on the A13 from the Barking flyover to the Beckton roundabout, and on the A12 from Poplar to Gants Hill after a lorry broke down earlier. Northbound A1M still closed in Nottinghamshire between 34 at the A614 and 35 at the M18. That's an accident. Also, the M6 in Cumbria. Now, that remains closed in both directions at junction 41 for Catalan. A serious accident happened earlier underneath the roundabout at junction 41. So long delays in the area and on the approaches to that one. Keeping you moving, your next travel update is in 15 minutes.
LBC Travel.
With GoToMeeting, helping smart businesses meet more and travel less.
The most effective way to get business done is to deal directly with the person at the top. And that's something you've come to expect. With all due respect, you don't wish to be dealing with juniors. So Barnes Rofe Chartered Accountants will assign a partner to your company. A partner whose experience, expertise and hands-on approach brings results. To arrange a free partner meeting, visit barnesrofe.com/radio. Barnes Rofe. Clever accountants for business.
Darling, have you seen these brand new Galliard apartments in Waltham Cross? 5 minutes walk from the station and only 25 minutes into London Liverpool Street.
You mean Galliard's King Edward House, with apartments starting off-plan from only £150,000?
Yes, it's a great opportunity for us to get the kids on the property ladder. And at these prices, we could even rent it out until they move in.
Don't forget Galliard's unbeatable specification at the price.
And once again, Galliard are offering exchange on the day with a deposit of only £2,000.
To invest in this exciting opportunity to get your family on the property ladder, come to our sales weekend at the Marriott Hotel Cheshunt on the weekend of the 14th and 15th of June. To register, call 020 7620 1500. That's 020 7620 1500, or log on to galliardhomes.com. That's galliardhomes.com.
Ian Dale at Drive on LBC.
With the RAC. 5-star rated breakdown cover at home and abroad.
It's 5:35 here on LBC. Just to say, in about 15 minutes' time, we're going to be talking to the Shadow Education Secretary, Tristram Hunt. He's been responding to Michael Gove's statement in the House of Commons this afternoon, so that should be around 10 to 6. But before then, let's take some more... we are going to take some more calls with Ian McCafferty in just a second. But first, a business update with Ben Kumar at 7 Investment Management, who I'm sure has been listening to every single word we've been uttering over the last 35 minutes. Ben, good evening.
Good evening, Ian.
Now, you want to talk about a brewery, surprisingly.
Yes, Fuller's Brewery, well known to people across the UK, and particularly in London, where most of its pubs are based, has reported a record rise in sales of 8.3%. That's mainly because Britain as a whole is embracing craft beers. Now, Fuller's started producing these, and they're able to charge a little bit more for them.
Craft beers? Sorry, I'm not a beer drinker. I know this will come as a shock to you. What is that?
It's basically just a premium beer, so that, you know, they're from certain regions of perhaps Germany or the Czech Republic. It's basically beer brewed with a little bit more kind of a market that likes taste rather than perhaps just quantity.
OK, I'll stick to my water. Now, TSB Bank, what news from them?
So that's the 630-odd branches of Lloyds is spinning out as part of a regulation from Europe. TSB will go public at the end of June, and it should be priced for between £2.20 and £2.90 a share, giving it a total market value of about £1.3 billion. That's actually less than the sort of sum of its assets, but that's sort of a normal thing for banks. So it's maybe not as quite attractively priced as Royal Mail was, but it should still do quite well.
And the markets today, how did they finish?
FTSE finished 0.24% higher at 6,875, and the pound was pretty steady against the dollar at 168.
Ben, thank you very much indeed. That's Ben Kumar from 7 Investment Management.
LBC Business.
With the Times Business, with extra pages dedicated to business comment.
Ian McCafferty is here. He's on the Monetary Policy Committee of the Bank of England. You can watch us at lbc.co.uk. We're streaming the whole thing live, and we'll be taking more calls in a minute. Before we go to your calls, Ian, Ben Kumar and I have a little bet that I reckon the FTSE is going to go over the 7,000 barrier by my birthday, which is the 15th of July. He reckons it's going to be a lot longer than that. Can you help me out at all on that?
I've learnt long ago that predicting equity prices, even over a short period, is a mug's game. So I think I'll leave you with the bet, and I'll watch what the outcome is.
I did try. Nigel, see if you can do. Nigel's do better. Nigel's in Streatham. Hello, Nigel.
Hi, good afternoon.
Hi, what would you like to ask?
I'm a new business owner, and, well, I've been grinding the stone for over a year now, and my business nearly folded twice when my product was kind of like the people liked it so much that the demand grew very quickly with new clients, and I was unable to supply their demand. The banks would not help at all whatsoever, and I couldn't find financial help for this anywhere.
Why do you think that was?
Well, one of the main reasons they keep quoting that it's the credit score. Now, I was declined for the first time when I had a credit scoring of 855. And I couldn't even get a Barclaycard for my business because that's when they said, they needed to see the business running. And about a year ago, I was a victim of identity fraud. And even though the police got in there, we got a police report, I got all the documentations, the reference numbers. There are a few companies that are refusing to take me off their file, and they're asking me to pay the debt which I didn't incur. And I can't get this removed. And the credit agencies, I I still, to this day, don't know who regulates them, and I don't know who to complain to.
Right. Well, let's first of all stick on the lending to small business aspect, because I mean we do a lot on small businesses on this programme. This is a constant complaint. Now, no one expects banks to just say to every single small business that asks them for a loan, "Yep, here you are, here's the money." But at the moment, it seems that very few banks are lending much to small businesses, and therefore, if they don't have a sort of business angel in the background, they can't finance their cash flows. What can the Bank of England do to sort of lubricate the system?
Well, we've already done quite a lot, and I think the proof of that is that when I travel around the country and talk to small businesses, I hear that conditions are better than they were a year ago. It's not to say they're perfect, and certainly not back to where we were before the financial crisis, but things have improved. And what the Bank of England did was introduce the funding for lending system, which provided incentives for banks to start to lend. And in the second stage of that, we actually specifically we focused on lending to the business sector. We excluded mortgages. So from that point of view, we are encouraging the banks. What I would say to Nigel, I think he's clearly had a very difficult run, and given all the problems, you can understand why any bank looking at his record might be concerned about the potential credit risk that they face. But I have to say that in terms of what's going on, people talk about the banks as if somehow every bank is the same. There are some banks who are very reluctant to lend. There are others who are trying to lend a little more, depending on their own business model. Well, I don't want to mention individual banks because I shall only be accused of advertising. But certainly, from what I understand, talking to individual banks across the UK, household names as well as others, there are very different circumstances for each bank, and some are looking to expand their business to small businesses. So the only thing I can say to Nigel is try and get as good a business plan and as simple a sort of set of paperwork as you can in the circumstances, and then shop around.
Why are there so few new entrants into the banking market? I mean, there are one or two, but you would have thought where most people are very sceptical about banks, and that's putting it kindly at the moment, a lot of people would think, well, if there's somebody new that they felt they could trust or that came onto the market, they could almost clean up.
Well, they could, except I think clearly to be a bank, you need to have a certain size and scale almost from the off. And setting that up from nothing is actually quite a difficult task. So it is a difficult difficult business to encourage new entry into, albeit that as we are seeing changes in the way banking is done, particularly with the onset of online banking and the internet and so on and so forth, we are now seeing some new entrants.
Let's go to Andrew in Docklands. Hello, Andrew.
Yes, hello there. Hello. My question is, Ian was talking about, Ian McCafferty was talking about, encouraging spending in the economy. But my point is that aren't you encouraging really sort of quite wasteful spending? If people save money, if you gave them a better rate of interest, if you put the interest rate higher, the money would be encouraged to go into, people would save because they're earning some money, and that would go into productive things. It would be spent by banks, loaning it out to other people. It wouldn't be wasted on, say, consumer goods and all these sort of things, and we would have, yes, a dip, but then we'd have a far more productive future as people were encouraged to do that, and better sort of productive businesses came about.
Well, 2 points there, I think, Andrew. The first is that when we cut interest rates as low as the 0.5% that we reached at the depth of the recession, people were so reluctant to spend that you needed to have rates at a very low level just to get them to spend at all. And I think that's been the initial cause. The other point, I think, though, is to say, well, if people saved all of their income, for example, you'd say, well, the banks would lend it out, but the companies that they were lending it to would then not be selling any products because nobody would be spending, they'd all be saving. There is a very a necessary balance between spending and saving, and that's going to vary across the economic cycle depending on the level of confidence of individuals. And our job is to try and understand that, to track it, and then set monetary policy in order to get the right balance between spending and saving.
OK, Andrew, thank you for that. Now, most growth forecasts reckon that there's going to be about 3% growth this year. Do you think that is sustainable over the medium to long term? I mean, what do you think the growth might be, say, in May 2015, to pick an entirely random month?
Well, I'm not sure I look at growth in monthly terms, but certainly we think that the three 3.4% that we have in the Bank of England's, the MPC forecast for this year, is likely to see some modest slowdown as we go through 2015 and 2016. Our current forecasts are in the high twos for both of those years. And that, I think, is because we have seen a degree of pent-up demand as people have come out of the recession, which has led to a burst of growth over the first half of this year, which we think will start to moderate as we go forward. But 2.8, 2.9 is in line with previous longer-term trends in the economy. So it's a respectable rate of growth.
Dave in Essex has texted in, when do you think rates will rise? If you were buying, would you get a fixed rate or a tracker if you're buying a mortgage, I guess he means?
Well, let me get the point about housing advice out of the way first, which is particularly under the new mortgage market review. People have to be very closely trained and qualified to give mortgage advice.
You must be qualified. You're on the Monetary Policy Committee.
I'm not qualified under the law, and so I would be breaking the law and could be,
as a punter,
taken out of this studio by the police if I were to give advice. So I cannot give advice on individual mortgages, I'm afraid. In terms of when rates will rise, I honestly do not know the answer.
So from what you were saying earlier, if I interpreted what you were saying earlier as probably towards the end of the year, that's when we could seriously expect a prolonged discussion in your committee.
I think the first thing to say is it's going to depend critically on how the economy performs over the summer and through the autumn. We do think that there's a scope for the economy to grow a little further before we have to start the gradual process of normalisation. That's going to depend on how fast growth is in the second, third and fourth quarters as to exactly how fast we are absorbing slack in the economy, and therefore when it becomes appropriate to rise. And the second reason I don't know is that, of course, one of the beauties of the Monetary Policy Committee is it's 9 people.
And you've got a lot of new people on it, haven't you?
We will do.
It's not just the same people over the course of the years. You've got some new members coming on.
We do. We have one of the I think quicker turnarounds in the history of the Monetary Policy Committee, in the sense that by the autumn we will have I think it's 4 new members.
But you're staying.
My term carries on till September 2015, so
Excellent.
I will be there till then.
We will hopefully have you back many times between now and then. I think this is absolutely fascinating that you're doing this, because I think it's important that, people think of the Bank of England and I'm not sure what they think, well, okay, it sort of controls the economy, but I don't think many people have the faintest idea of what it does. So I'm really glad that you are doing these phone-ins. Ian, thank you very much indeed. We hope to see you back maybe in the next month or two. I hope you've enjoyed it.
Very much so.
Thank you.
Look forward to seeing you again.
Now, we will be talking to the Shadow Education Secretary, Tristram Hunt, about the Trojan Horse Schools in Birmingham in just a few moments' time. This is LBC. It's 5:46.
Ian Dale at Drive on LBC.